Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah. And this is a show where we take you through all the stocks that are in focus on the back of the news flow or on the back of technical charts. But first up, let's take stock of how the markets are shaping up. It is a day of recovery. However, Nifty is pretty much within the previous session's range. It's a sideways market. Nifty is pretty range bound, but the real recovery is really coming in on the financials, on the banking sector, which is outperforming the benchmarks.
And even the broader markets, because they seem to be holding up very smartly today. But like you can see on the bottom of your screen, it's been a 100-point fall on the Nifty from the day's highest point. So we did see some kind of a recovery, some surge coming in on Nifty 50, but we've trickled down again from those highs. Nifty Bank, let's pull up a Nifty Bank and see what that index is up to, because that is managing to hold up quite smartly. More than a 1% gain coming in on Nifty Bank. What's important to know is the broader markets. Let's see what they're up to, because they have been largely outperforming the benchmarks ever since the start of the trading session today. Nifty mid-cap continues to sustain those 1.8%, roughly 2% gains. Nifty small-cap also not too far behind, 1.4% uptick coming over there as well. Sensex also 0.2% higher, managed to cross the 76,500 mark for now. But let's see if the Sensex is able to sustain above those 76,500 levels for the day. Advanced decline ratio steeply in the favor of the advances. India VIX is down 2%. We're below the 16 mark for now on India VIX. And sectorally, if you take a look at what the sectors are up to, Nifty Metal is your biggest gainer today, roughly 4% uptick coming in. The metals have been shining bright today, followed by PSU banks, energy, auto, media, pharma, Nifty Bank and realty. The two sectors that are ailing away and are in the red right now, Nifty FMCG a 1.1% cut, and your biggest loser for the day, Nifty IT 2% lower and largely dragged by HCL Tech. We'll also be telling you why HCL Tech is languishing away in today's trade and weighing on the IT index as well as overall Nifty 50, but that's what the market breadth is looking like right now. A 100-point fall coming in on Nifty 50 from the day's highest point of 23,264.
All right, Nifty giving up those gains, but moving on and let's get on board now. Osho Krishan, who's a senior analyst, technical and derivative research angel 1 on the technical charts, and from our research team, we are joined by Ria. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today. One of the names that is in focus today is BEL, that has that was doing very well in the morning session. BEL has received orders worth 561 crore rupees since December 23rd, 2024. Major orders include communication equipment, electro-optics, upgrades for SATCOM network, radar and fire control systems, spares, services and so on. With these orders, BEL has accumulated orders worth 10,362 crore rupees in the current fiscal. And on the back of that, BEL is firing away today, holding on in this market with gains of 2.7% as of now.
Okay, so positive news though for BEL. Stock is also reflecting that positive sentiment. Osho, hi, good afternoon and happy Makar Sankranti to you and all our viewers as well. Osho, the first stock that you've picked out for us today on the charts is Bharti Airtel. Give us an outlook of this stock on the charts, because last 6 months it's done okay-ish. It's not been bad. It's not been a negative return, but not much also happening over the last 6 months. Last 1 year also, the stock has done very decently, a 45% uptick coming in. Tell us what's the outlook going ahead, and do you think that this steady mover will continue to move steadily even amid shaky markets like these?
Very good afternoon to both of you, and wish all of you a very happy Makar Sankranti. Well, I have chose Bharti Airtel because of two purposes. One, because this is a low beta counter, and even in such kind of scenario where the whole market is facing a very strong sell-off, this counter is managing to hover at a higher levels around the 21-day exponential moving average on the daily time frame. So there is a very strong consolidation zone that it is being into. 1575 to 1610, 1620 is a very strong consolidation zone for Bharti Airtel, and I am expecting that from here onwards, the time you witness a very decisive breakthrough in this consolidation, there can be a decent or a very strong run in the coming period. That is from short to medium term perspective. So I'm expecting nearly 1680 to 1700 to get retested in this counter once there is a traction returning back in the market. So that is why Bharti Airtel is looking comparatively bullish as compared to the overall market.
Okay, so that's the outlook on Bharti Airtel, looking good compared to the entire market is Osho's take coming in. But let's talk about the biggest dragger on the Nifty as well as the Nifty IT index today, and that's HCL Tech in a free fall today and a massive fall coming in of roughly 8%. That's the lowest point of the trading day. In fact, it has surpassed that. 8.5% lower is where the stock is at right now. Let's take a look at what's been ailing the stock. The Q3 numbers came in post markets yesterday. If you take a look at the consolidated sequential numbers, they're largely overall in line with what the street was expecting. Revenue is up 3.6%, PAT is up 8.4% sequentially. EBIT margin has also expanded at 19.5% compared to 18.6%, which is up 90 bips on a sequential basis. The constant currency revenue is up 3.8%. The new deal wins, the TCV is also that has shrunk a little bit, so that is basically something that's weighing on HCL Tech. But more importantly, it is the management commentary where they are saying that the EBIT margin is expected to be between 18 and 19%, and there is another metric that has not quite met their expectations as well. So that is a slightly weak commentary coming in on HCL Tech. Let's take a look at what brokerages are making of it. Morgan Stanley has maintained an equal weight with a target price of 1970. Nomura calls these numbers a mixed bag. They've maintained a buy with a target price of 2000. It is Nuvama that has downgraded the stock to a hold rating and cut the target price from 2125 earlier to 2150. And Motilal Oswal has maintained a buy with a target price of 2400. That's the entire lowdown on HCL Tech and why the stock is ailing away today.
All right, HCL Tech reeling under selling pressure today, but after HCL's inline set of Q3 earnings, C. Vijay Kumar, who's the CEO and MD of HCL Tech, and Shiv Walia, who's the CFO of HCL Tech, share what they expect from the strong momentum to continue or not. He also says that there might be some moderation due to the end of large deals. Let's go across and listen in to what else they're expecting.
We delivered a very good quarter. Our Q3 was strong. Of course, the software business has a seasonality which delivered almost 18% sequential growth. And services business also delivered a strong growth of 2.2%. And we expect the momentum to continue in Q4, but there would be some moderation in some of the large projects coming to an end and anniversary impact of some of the large deals. Factoring all that, overall full year guidance, we provided 4.5 to 5%, a 1% increase in the lower end of our guidance. Our pipeline is quite strong. It's almost near all-time high, and it is well diversified pipeline across verticals and geographies and service line.
Okay, that's the word coming in from the top bosses at HCL Tech. Let's keep it going with all the stocks that are in focus today. Osho, coming to you, give us a tech check on what IREDA is looking like on the charts. It's a recent earnings candidate. Now, last 1 year, the stock has done decently well for itself, but it's the last 6 months where the stock has started to consolidate. A roughly 30% fall coming in. Last 3 months also, the stock has been under pressure. Tell us what's the outlook going ahead. Do you see a reversal on the technicals now for this stock, or do you believe that this consolidation is here to stay for a little bit longer?
See, overall, the technical structures of IREDA has reversed from the zone of nearly 180 in the month of November 24. And from there onwards, it is on the verge of making higher highs, higher lows on the daily time frame, which also coincides with the support of 200, the simple moving average. So I expect that from here on, if everything goes well with the counter, then 190 should be acting as a very strong support, while on the higher end, 230 to 35 is the immediate resistance that can be seen in this counter. So overall, I am expecting that the continuation of higher highs, higher lows should persist in this counter. Overall, the technical structure is showcasing a kind of reversal. So that's why from the risk reward point of view, this counter looks lucrative. 190 as a stop loss and 235 as a target for short-term traders that can definitely eye on this counter.
All right, that's a technical view coming on IREDA, but another stock that is fired up in trade today is Biocon. In fact, since yesterday, this has been on fire on the back of that US FDA approval from Malaysia, for the Malaysian plant, and of course, the upgrade that came in from BOFA after that. But today also, there's a brokerage note that's powering the stock. Tell us, Ria, what does the brokerage note say?
Well, yes, Biocon has been one of the higher flyers in trade today. Now, remember, yesterday, the US FDA had classified Biocon, a biologic site in Malaysia, as voluntary action indicated, and BOFA had also maintained their buy rating and raised their target price to rupees 435. Now, today, HSBC has come out with a note on Biocon. They have also upgraded the stock to a buy rating from their earlier reduced rating, and the target price has also been hiked from rupees 290 to rupees 430 now. Now, they believe that a turnaround is in sight for Biocon. The company is set for an operational turnaround led by key biosimilars launches and recovery in generic sales as well. They see multiple triggers to support earnings growth going ahead, and the recent FDA clearance of the Malaysia plant has also removed the GMP regulatory overhang. So Biocon up almost 7% on the back of this.
Okay, that's the reason why Biocon is in focus yet again on the back of brokerage action after the positive news flow coming in from Malaysia and the VAI status yesterday. But on that note, we'll step into a very short break on this edition of Market Fatafat and keep it going with all the big buzzers on the news flows as well as technicals on the other side when we return. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And Osho, coming to you, you picked out Maruti Suzuki for us on the charts. Last 6 months, the stock has been slightly under pressure. Last 1 year, it's not done all that much, but it's at least been in the green. Last 3 months, also 5% cut coming in. Slight bit of a consolidation is what we've seen, but do you believe that now would be a good entry point? Does this consolidation make the stock look attractive on the charts now?
See, overall, there has been a steep correction in Maruti, and also looking at the recent development in the last 3 weeks, the counter has even rebounded from the zone of 10,800 and is now hovering above the 21-day exponential moving average. That means for the short-term perspective, the chart structure has seen some kind of a strong movement, and I'm expecting that in the near-term period, there can be a continuation of a revival in this counter. Again, not very much bullish on the targets, but there can be a strong pullback that can be seen towards the zone of 12,200 followed by 12,400. This will be the immediate resistance on the technical front. Once it breaches the zone of 12,400, then we can see continuation of bullish trend in this counter.
Alright, that's Maruti Suzuki on the charts. But moving on to a high flyer in trade today, and that's JSW Energy, that's trading with gains of over 5.5% today. It has received a letter of intent from the resolution professional for its resolution plan submitted for KSK Mahanandi Power Company under the corporate insolvency resolution process of the insolvency and bankruptcy court. The KSK Mahanandi Power Company owns around 3,600 megawatts of thermal power plant in Chhattisgarh, and on the back of this letter of intent, JSW Energy is up and away in trade, trading with gains of 5.5%.
Okay, that's JSW Energy in focus. Osho, coming to you once again for a technical check. You picked out Maruti Suzuki from the auto pack. Now you've picked out Uno Minda from the auto angst. Is this a sector that you're overall bullish on, the auto and the auto angst theme? And if you take a look at Uno Minda specifically, last 6 months it's not done much. Last 1 year, although the stock price is up by 50% roughly. Tell us what's the outlook on the charts for this one.
See, overall, firstly, from the auto space, I am expecting that there is a possibility of bottoming out in the overall auto space, and there can be some kind of revival in the coming period. So overall, yes, there is a view of having a bullish momentum in the overall counter. Just need to have a confirmation on a stock specific front. Now coming to the technical front of Uno Minda, this counter has been hovering above the short-term moving averages from past 4 weeks. And we are expecting that from here onwards there can be a decent upsurge can be seen in this counter, because even in such tight scenarios the counter has been hovering or maintaining the higher level. So I'm expecting any breakthrough above the zone of 1100 can boost a strong momentum in this counter towards the zone of 1250 in the short term period. So definitely one can look this counter for a buying opportunity with a stop loss of approximately 1010 odd levels for a very short term perspective.
Okay, so that's the outlook coming in on Uno Minda. Let's talk about BSE, because this stock has also been doing phenomenally well in today's trading session. At one point of the day, it was up by more than 5%, and let's see what the stock is doing right now. Well, yes, continues to build onto those gains. This is on the back of a very bullish brokerage note coming in from Jefferies, wherein they've upgraded the stock to a hold rating from underweight and hiked the target price to 5,250 from 3,500 earlier. So there's a significant upgrade coming in terms of the target price as well. They believe that exchanges will see earnings upgrades and brokers will have to take price hikes, is what Jefferies believes. SEBI's new FNC measures will be impacted, and the option volumes will also be impacted by roughly 70%. That is number of contracts, is what Jefferies is pointing out. The premiums are down by 10% in Jan month to date versus Jefferies' expectations of roughly 25% decline. So the cut has not been as steep as Jefferies was penciling in earlier. The average ticket size for the industry is up 3 times in the second week of Jan as well compared to November 2024, and which saw implementation of higher lot sizes, and discounted broking volumes can see a 40% hit and will need a larger price hike as well. So this is what Jefferies is believing on BSE, and that's the reason why the stock is doing very well right now, more than 5.5% higher in today's trade.
All right, moving on from the capital markets theme to auto pack, Osho, that you've picked out. Like you mentioned, that you're seeing some bit of bottoming it out of in this sector, and now the reversal could be there. But M&M is one stock that has, from the auto pack, that has done pretty well for itself. And in the last 1 year itself, it's given returns of 87%. So this has been an outperformer in the auto pack. From here on, do you see it head? Where do you see it headed? Because it is, you can see it heading towards its 52-week high now.
Overall, the technical structure for M&M comparatively to the whole sector is very bullish, and it is expected to surge in the recent short to medium term time frame. But I am expecting that there is a very strong resilience around the zone of 3200. The time it breaches the zone of 3200, then we can see approximately 300 point of higher movement in this counter in short term period. So I am expecting a target of 3500, but 3200 should be a level where one should definitely watch whether it resists the counter, or from where we can see continuation on the higher end. But overall, I am expecting that with the sales of the new vehicle of Mahindra, I am expecting that there can be a strong momentum that can be seen on the stock prices. So overall, from risk reward point of view, 2950 is a very strong support for this counter. First target is 3200, followed by 3500 in the short term period.
Okay, those are the levels to watch out on M&M. 3200 first, followed by 3500 on the upside. Ria, coming to you, United Spirits is the stock you've picked out. Big management change happening at the top. Tell us what it is.
Well, yes, United Spirits has been in focus today. It is down almost 5% after the company has announced a leadership transition, with the CEO Hina Nagarajan set to step down on the 31st of March 2025, and she is going to take up a new role in the Diageo Group. And the company has now appointed Praveen Someshwar as the MD and CEO of the company with effect from the 1st of April 2025. Now, Praveen has been the CEO of HT Media and has also had a 24-year career in PepsiCo. And on the back of this, Macquarie has actually maintained their underperform rating on the stock with a target price of rupees 1,175. They've also highlighted that they now await clarity on driving new brand development in the prestige segment, and next steps in certain states where receivables are due are also awaited. The stock is reeling under selling pressure, down almost 5% as we speak.
All right, those were the stocks in today's market. Fatafat. Ria and Osho, thank you so much for taking the time out and joining us. With that, we are completely out of time in this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere, because closing trades is taking all the market action forward.